Larry, regarding this situation we're in economically, if we can ever get out of it.
Yeah, look, the answer is yes.
Okay.
I don't believe in secular stagnation and all this other stuff. We have made bad policies. We're spending too much, we're regulating too much, and we're taxing too much. We are damaging small businesses, not helping them. We're creating the wrong incentives. We're not letting energy run, which is a very hard-hat, blue-collar industry. So if you change that, and by the way, JFK changed it, Reagan changed it, we can change it again, could be a Democrat or a Republican. If you change that, we'll restore growth. You do good, do the right things.
You know, there's a school of thought that says the explosion of debt, the advent of the credit card, debt levels are just so stultifyingly high that no matter what we do, we have this ceiling on growth because everybody's maxed.
Don't agree. Actually, I think the causality runs the other way. The reason we have so much debt, now let me start with federal debt, which by the way is publicly held federal debt is about 70-some% of GDP. Not all that. But the point is, if you don't grow, you're going to run deficits, whether you're a government or you're a business. So if you're growing at less than 2% for 15 years, you are causing a lot of spending, automatic spending, large entitlements, small entitlements, particularly unemployment insurance, disability, all these things have exploded in the last decade or so. It's because we're not growing. We're not growing. So here's an interesting factoid. The Congressional Budget Office, the CBO, says every 1 percentage point higher real GDP, okay, above the baseline, which is 2% or less. So if you grow at 3 instead of 2, just for example, you will curb deficits over 10 years by roughly $3 trillion. And here I am talking about supply-side tax cuts and deregulation and a sound dollar. We should grow at 4 or 5. So if we grew at 4, just for argument's sake, we would have about a $7 trillion reduction in deficits, which translates into lower debt. And I think it's true for businesses too. So to me, the key is creating growth. I don't think we're over leveraged right now anyway. Because you've had a rebound in the stock market. You've had a little bit of a rebound in housing. The wealth numbers, the household wealth numbers from the Fed came out last week. They were good, new high. So I think that's overrated. I've never been a debt monger, scarer. Me, I just grow. But I admit I'm paying down the mortgage on my own house.
Okay. Finally, on the issue of, say, Trump and being a free trader and this thing with China. So they're cheating with their currency. What should Trump do about that, if anything?
Well, he's got to do some reasonable things. I mean, we should enforce our trade deals. I agree with him on that.
Yeah.
We should not have blanket tariffs, which will do probably more harm to us than them. The United States is the lowest tariff in the world. We're 1.5% average tariff. We're already a free trading country. So I wouldn't want to pick a trade war, but I might want to revisit some of the issues, which in the WTO, World Trade Organization, if you can prove dumping or you can prove currency manipulation, then the United States has the right to retaliate. Reagan retaliated against Japanese electronics years ago. I didn't agree with it. I was overruled. And both W and Obama, I think we've protected steel down through the years. I don't like any of that, but sometimes you have to do something. But there is a cost, right? So we may protect our steel with a higher tariff on imports, but it just means higher prices for other businesses that use steel, consumers that use steel products. You see what I'm saying?
Yeah.
So you may be able to thump your chest and say, I got them, but there is a cost. So I'm a guy who says, in America, every person should have the freedom to buy the best quality goods at the lowest available prices anywhere around the world. That's what I believe in. And that is basically a free trade vision. So we'll see.
That's why a Big Mac is $6 in China, right?
Is that what it is?
$5.50.
What is it here?
I don't know. I haven't had one for a while.
I don't eat that stuff.
Oh, my God, it'll kill you. Okay.
I wouldn't eat it at all.
Okay.
So what's Singular Research? Tell the folks out there who may not be familiar with it.
Singular Research, we focus on small and microcap stocks, the forgotten, the forlorn, misunderstood, that are underserved, undercovered by Wall Street research, you know, and that have been kind of lost with this big bulge bracket, you know. The banking deals just don't move the needle. And so they're kind of caught in this microcosm of
Malaise.
malaise.
So we had a good question about that regarding crowdfunding
Yeah,
over the internet.
yeah,
So that would help you.
that would help. That would help.
What's wrong with that?
Well, nothing's wrong with that. I think, great example, you've got one company and two classes of stock, and I think this kind of underscores the psychology going on. So one is the A class. It's got 20 to 1 skewed to the shareholder votes, and that A class barely trades, since it's kind of a food company, a stable company. That stock down maybe 2% in the last year. Now you have the B class. It's very liquid, owned by a lot of mutual funds. You know, your Royces, your small cap funds.
Individuals?
No, not many individuals.
So this is the stock market version of the deplorables.
Yeah.
Investors that don't want this.
This asset class, actually, yeah, exactly, being deplorable.
It's just a turn of phrase.
So the B class, the one that's liquid, is trading at about a 35% discount to the A class that doesn't trade. Same company.
That's a lousy system.
That is a bad system. So
So you're going to overthrow it.
we're gonna throw it out.
That's good. I
We're gonna
like
send
it.
it back.
You know what Jefferson said? A revolution periodically is a very good thing for democracy. This guy's a revolutionary.
That's right.
I'm Kudlow. See ya.